Leaving the daily grind of working for someone else and starting your own business can be exhilarating. But once you get started, accounting and tax duties can very quickly overwhelm you. So what are the tax secret write-offs that most LLCs just completely overlook? Yes, of course you can have a good CPA, but honestly, between you and me, if you honestly think that they are going to give you all of their secrets or dig line by line through your books to find every last tax savings, you're lying to yourself. Yes, they are a great resource, but if you have some understanding of some of these tax write-offs, that way you can plan throughout the year, you can provide everything you need to your accountant at tax time, and you can save a lot of money. All this and more in today's video. Hello and welcome to Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, real estate investor, author, YouTuber, paramedic, and once again, Bonnie and Clyde are running around in circls around the pool. But before we go any further, a very quick reminder. As my regular viewers, you already know this. I have a team of outstanding lawyers that Clyde keeps chained up so they don't escape. The only problem with these lawyers, they get a little rowdy or I make a video. The only way to calm these lawyers down is to give a quick disclaimer. The opinions in this video are exactly that. They're my opinions. I am definitely not a tax advisor. I'm not a lawyer. I'm not a CPA, so this is not legal financial tax advice. You get the point. Okay, enough of that. Let's get to today's video. Number 4, startup and organizational costs. Once you're already up and running, you have advertising, utilities, office supplies, repairs. All those can be deducted as business expenses. That's obvious. But you can't do that before you open your doors for business. Those types of costs are called startup costs, and you may deduct $5,000 in the first year before you actually open your business. Any remainder, anything over that $5,000 will have to be deducted over the next 15 years, 180 months. All right, making a quick, easy example here is if you had $10,000 in startup costs before you were fully operational, you can write off the first $5,000 on your first year's taxes. Simple. Then you still have $5,000, which will be written off equally over the next 15 years. Or, for example, here it'd be $333 per year you would be deducting. Now, suppose that you expect your business to make profit immediately. In that case, you may be able to work around this rule by delaying some of your payments for some bills until after you've opened your business. Or you could even do a very small project with one client so that you officially have started your business. However, if, like most businesses, you suffer losses during the first few years, you might be better off taking the deduction over the 5 years, so you'll have some profits to offset them. Startup costs can also include professional development or education, such as Meet Kevin's excellent online courses for real estate investors. You should check out my video linked down below where I show you how I personally made an extra $20,000 on a deal just by watching Kevin's video. Number 3, home-based business write-offs. Now, I'm sure you've already heard that you can write off a home-based business. That's obvious. But there's a second part that many LLCs just completely overlook. But before we get to that, just hold on to that thought for a second. As a general rule, if you operate a business from a dedicated place within your home, you can write off that proportional amount on your taxes. Or simply put, if your office uses, say, 10% of your home, you can write off 10% of your costs. The calculations are slightly more complex than this, but don't worry, they really are still very simple. I've covered this all in great detail in another video linked down below. So now let's get back to that second part, the one that most LLCs do not know about. And this is, what if you already have a physical business location? Maybe it's retail space or something away from your home. It could be anything, rented office, storefront, etc., just as long as it's not part of your home. Usually people would think, well, I have a normal business location. I cannot write off my home-based business as well. But here's where you're wrong, my friend. You can list your home as a second business location. Then you can write off the same proportional amount on your taxes as if it was your only business location. There are, of course, some rules to this, and I covered it all in great detail in that previous video I told you about linked below. Do you want to know one more bonus tip about this home-based business write-off? You can also write off your automotive travel expenses between your home and your retail business location. This is normally not allowed because you can't normally write off travel from home to work. But you can write off travel from 2 different business locations. So your home office is one location and your retail business is another location. That is perfectly legitimate business expenses to write off your travel between the 2. Speaking of vehicle tax savings, number 2, vehicle deductions. If you use your vehicle to meet clients, pick up office supplies, or run other business-related errands, you can deduct this from your taxes. That's kind of simple and obvious. But keep in mind your trip must be business-related to deduct it. So you can't go pick up your kids at the school and I can't take, Bonnie and Clyde to the dog park. You have 2 options on how you can write off the vehicle expenses. The first, and usually the easiest, is mileage-based. Each year, the IRS publishes a list of standard mileage rates, and these are what you use for your deductions. For 2021, the rate is 56 cents per mile. This is down a bit from 2020, where you received 57.5 cents. I guess like everything else in the world, taxes are going up, costs are going up, and we all get shafted. But either way, while 56 cents doesn't sound like much, think about it for the average Uber driver that does over 50,000 miles per year. That's an extra $28,000 in write-offs. There are multiple apps you can use to make it easy for you to keep track of your mileage. QuickBooks Online offers one, and there's a bunch of others. If you choose not to use the per mile deduction, the second option is the actual expense and depreciation model. This is where you write off the actual costs associated with this vehicle that you have receipts for, and of course for any depreciation in your vehicle's value as it ages. As a rule, if you use a newer car, mostly for business, the actual expense method provides a larger deduction at tax time. If you use the actual expense method, you can deduct the depreciation of the vehicle as it depreciates over the year. Now, it's important to know, if you want to qualify for the standard mileage rate, you must use it in the first year you use your car for business activity. Also, you can't use the standard mileage rate if you also claimed accelerated depreciation. There's a bunch of rules I don't want you double dipping, and Section 179 of the tax rules give you all these details. Number 1, marketing and advertising deductions. It goes without saying, if your customers do not know about you, there's no way for them to spend money with you purchasing your goods or services. For many businesses, small and large, marketing and advertising expenses are their most significant expenses per year. Thankfully, every penny you spend here is fully tax deductible, but you still need to be smart and strategic with your marketing spend. I'm in the final stages of launching a new website, www.open4business, as part of my #OpenForBusiness campaign to bring greater awareness to America's small businesses just like yours. In this campaign, myself and a small team of amazing entrepreneurs will fly in a helicopter to all of the lower 48 states in the US. We will stop at each state and visit and meet with small business owners just like you. Throughout this journey, I will be collecting photographs and business bios to include on our website and also in a printed book. They'll be highlighting some of America's most remarkable small business entrepreneurs. Now, the website's not exactly ready to go live yet. This is still a new venture. I'm getting started. But if you would like to be one of the first to be considered for inclusion in this program, go to the website right now and sign up for the mailing list. Also, make sure you subscribe to this channel, click the notification bell so you get the notification as soon as this entire campaign goes live. What type of business do you have? What services or products do you offer to your customers? Are you an LLC? Are you a C Corp? Are you a sole proprietor? Comment down below and let me know. Thank you very much for watching. Please make sure you click like and subscribe. Doing so really helps the YouTube algorithm. I appreciate it, as do Bonnie and Clyde that, once again, they're still running around by the pool. Thanks, and I'll see you on the next one.